Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. Always some great market insights right in the middle. This has been a choppy week for stocks, pretty much spot on as it tried to get up into the resistance areas. We saw that happen pretty much perfectly in the S&P 500 and then roll over. We did expect that to happen, and we'll show that at the end of the show in our short-term view. Background information, pushing the market, well, pretty much same thing. Politics sure is heating up, and we have a lot of news out there about slowing economies, especially big things going on in South America, right? Brazil, Yusuf being impeached, suspended, and Venezuela. How about this? They anticipate that their inflation rate for this coming year, this next year, 720%. How do you like that? That's what happens when you do some crazy money printing, and I don't think we're headed for that, are we? Well, biggest issues for stocks really have been retail. This is a week where the Amazon monster ate the retail. That's the brick and mortar retail, as they have just crumbled, as if that brick and mortar buildings, an earthquake has hit them. Amazon makes it to a new high. It might be all Amazon that is causing it, and it might be the fact that the consumer out there is pretty tapped out and not spending a lot of money. It could be all this political stuff that just has people very, very concerned about what our world is going to look like here in the United States going forward. Stock market, we could call this a tone change, really, where it's not really able to hold rallies very well. Tries it, did all week long, and then selling just seems to come in afterwards. So we're getting that really on Friday as they try to rally early on, and then the market selling off. Fed heads, they're out there speaking, of course, as they always do, and a couple of them came out just today and said, well, they think it's time to start pushing up interest rates, but that is not really affecting the bond market at all. Bonds moving up strongly again on Friday. It's been a strong week for bonds, and we have been looking for a short-term drop in the bond market, but it sure isn't showing yet at all. For our members next week, this coming week, we're going to have a special big picture analysis on the bond market, and I think you'll find it very, very interesting. As far as the dollar goes, well, it's had a bounce in here. Of course, it's gotten hit pretty hard and was trading near 100, and our target was 90 for the year. It got down to about 91.5 and now putting on a bounce. That's kind of affecting gold and silver, which have a little bit of a correction going on, not all that significant. And we're going to talk about gold stocks in a stock sectors segment. We talked about it actually this week. So for those of you that want to see that segment, go into our members section and you'll see stock sectors on the gold stocks. And I think you're going to find that interesting also. We believe there is an opportunity coming there. Oil market, well, that has been stronger, but it is really in a tough spot. Really, we think it's getting ahead of itself, and we're going to comment later on this as a similar thing had happened in steel, and we saw the steel stocks just coming apart. So I'll show you the chart on U.S. steel a little bit later on in the show. Truth is that it's really not supply demand that's holding it up, and in this slowdown in the world that's going on, that really we're seeing it in Europe. They have just downgraded the growth there. Of course, in China, it's well under the 7% number, maybe well under it. And the real aspects of the supply-demand situation changing for oil don't appear to be there right now. So oil trading up here near the $47 number. sure doesn't look like there's a lot of upside left in there. Let's take a look at our 60-minute chart of the S&P 500, and you will be able to see what happened overnight and during the day all week long. So we're going to look at the gray area, which is overnight, and also look at the white area, which is the trading during the day. On Monday, you can see overnight it was a choppy day, not much, and the same thing happening right over here. We had oil to go up to 46 bucks in here, got a bit of a rally, oil break all the way down to 43.90, and you got this sell-off, and then it really chopped around. Gold had a big down day, down 35 bucks early in there, and for oil, that big overnight range come. Bank of America says $35 coming again. I think that is possible. My targets are more in the high 30s, so that would not surprise us to see mid-30s in oil coming again. Fed Evans comes out and warns to be cautious, and he's the one that is being more cautious compared to some of the other Fed heads that came out during the week. Tuesday, overnight, you can see right in here, Japan warns of a yen intervention that pushes up overnight markets. Then it pulled back, and then oil rallied right over here and pushed the markets up again. So with Bank of Japan threatening, that really gave the lift. They want to really push that yen to the downside. World markets slightly lower here overnight, but Macy's poor sales cuts. They cut their forecast. We'll show you that Macy's chart in just a few minutes. So retail stocks getting absolutely dumped. Oil tried to rally. You see a big rally right over here that oil got, and our market stocks ticked up. But oil stayed up, really, and the stock market sold. So that's part of that tone change we're talking about in there that happened on Wednesday. Judge comes out and stops the Staples Office Depot merger. They say it's anti-competitive, and I say to that, bull crap. What about two companies trying to get together that have been struggling and create efficiencies so that they can improve themselves? They think it's anti-competitive. They break up the deal. And so now these two companies will be out there struggling, and Office Depot could really struggle on that. Look at the hits they took. 35%, Staples 17%. They were big losers for the week. And as I said, the rally in oil, no help there at all. Here, the yen drops against the dollar right over here, and you get this overnight rally. Eurozone was up pretty good, Asia flat, and the yen weakness in there really starts to lift stocks. But now you see a big downside reversal in oil right there, and the stock market got hit really pretty hard. Oil bounced right there, and it bounced a little bit, but it really looks like the stock market's relative strength to oil is showing it's very negative. In other words, not much in the way of rallies when oil goes up, but significant declines when oil goes down. So that really is something to keep your eye on. This was the day that EURUSD was impeached and then suspended. World markets on Friday, they started out pretty much mixed. Oil started to break over here and broke futures, but then they rallied back right over here. And the IMF, they came out with a strong caution about the Brexit. And that vote is going to come up in the summertime, maybe in about 6 weeks. PPI stronger, retail sales stronger, consumer spending stronger. No effect as the bond markets jump over a point. The stocks still struggle, can't hold these rallies, and you can see getting late in the day here on Friday, the stock market is really on its butt. With S&P futures down about 18 points. So as we're recording this, so this shows you the kind of weakness that has been going on, and we'll call it a tone change. We'll say that again, as things do seem to be struggling. Let's take a look at the calendar for this coming week. And not much in the way of earnings. With the retail under such trouble, we wouldn't be surprised to see Dick's and Home Depot and Lowe's struggle on Tuesday morning and Wednesday morning. Target also on Wednesday morning. So the Walmart on Thursday. These retailers are all coming out, and they're under this huge pressure. So it wouldn't surprise me to see some negative earnings come out there also. Urban Outfitters, another one on Wednesday afternoon. afternoon. The big news event for the week coming out, FOMC minutes, that'll be 2 o'clock Eastern time on Wednesday. No other big events that I can see right over there for the week, and that Wednesday one can get you a pretty good move. So that's the opening segment for Market Week, and we're going to be right back and bring you the best and the worst of the week. Best of the week. This was the week for the gamer stocks, really. Great earnings out of Electronic Arts and NVIDIA. Just super upside moves. We'll take a look at big gains in Electronic Arts, 22%, NVIDIA, 13%. Man, these were some stocks that were already in some powerful patterns. We had anticipated that there was going to be some correction in them, but these earnings just absolutely blew them through the roof. Let's take a look right here at Electronic Arts. You can see this massive week on the upside as it breaks through these resistances here and gets up right very close to its all-time high there, up near about 77. So just a monstrous move. We are projecting a bit of a correction in here, but you can't deny the greatness of this pattern, of this performance. They really had a big beat on earnings. NVDA is the next one. Had this big move. We had, again, been looking for some kind of a correction, but it blasted through big on the upside. And this, again, we'll still look for some kind of a pullback, but these are great patterns. I had some anecdotal comment to me by somebody that I know who's an avid gamer that said that their graphics cards were just fantastic, and of course I didn't have any long position in there. Wouldn't that be inside trading if I know a gamer that loved it? Well, maybe not. Anyway, I didn't have it, and it's a great pattern. Just looking for some, few weeks of modest pullback in there, and then still doing really well. Next one we'll look at is Monsanto, MON, up 10% on the week. There's some talk in here of a bear being interested in a takeover, but it's being poo-pooed a lot also. Stock gets right up to that last area of resistance that you can see, which is this past cycle peak, right on the 34-week moving average right there, but now gets up here. So the resistance is that level right there, around maybe 101, and then this level right over here around 102.5. So we think this is going to be the place that has a rough spot, has some sort of a pullback, and then maybe it tries again based on the cycle pattern that we see in here. So everything is based on our cycle projections, and what we're looking for is, well, this not to happen and then pull back. Not a great environment for takeovers, actually. Of course, we mentioned Amazon, AMZN, as the monster that killed retail. And here you can see, we'll show in the next section how bad these retail stocks were as this stock moves up to an all-time high. Now, it's been in this rising pattern this whole time right in here. You can see this cycle pushing up right in here, this big green zone. We, again, believe that we're getting into a period here where, well, the market might have some trouble, and this goes into some sort of a correction. But then again, likely up here again. Literally, based on the growth that this company has had and the massive amount of Prime subscribers they have, there's no reason not to think this can't be an $800 or $900 stock sometime, all that not that far out there. But right now, we're going to look for some sort of a pullback with the stock market, maybe get down into the 665, 675 area, and to us that would be a major buying opportunity were it to do that. Chipotle CMG finally moving to the upside in here based on this pattern. It was expected. You can see this nice cycle rhythm right in here and due to turn up. So this looks like a base to us that's formed, and it's certainly coming down from 758 all the way down to 400 was a major debacle. We could see it coming up and testing the 34-week moving average right around, let's say, 525. So we think that there is a possibility that this stock does do pretty well in here, then rolls over again, and then if it establishes this whole big basing period there, it'll probably be better and past all of this problems that it had with all of their food issues and people getting sick. So that's basically what we think a bottom forming. Now, the solar stocks had a real rough day and then had a good bounce. CSIQ is the one we want to look at. That says this had a nice gain on the week. We have been very patient on this stock, saying that one of our favorites is that it's only trading at about a 9 PE. Their earnings are really solid. They've had issues because they have a lot going on in China, but we think this is a bottom starting to form. Man, around this $15, $16 area, we think this is a super buy on this stock. Really love it. I mean, the earnings look like a year out now at about 270. So you want to buy a stock at $15 with those kind of earnings. If Hillary Clinton gets elected, I mean, alternative energy is just going to fly anyway. So this is the one we really love. Maybe another week or two of fooling around in here. But then I think that is going to be the stock that could get a good lift on the upside. Our short-term target in CSIQ would be 19 or 20. So trading right now at 17, we want to buy it in that 15 to 16 area. That is the best of the week, and we'll be right back with the worst. For the worst of the week, well, before we get to the retail nightmare, take a look at steel. We're going to look at U.S. Steel. This is a stock that we were all over, saying that a couple of weeks ago we had a short side setup in there and had come up to a major resistance area. So amazing how you get investors, analysts chasing stuff at a bottom. When rolled steel fell from like 200 to $40, and then it ticks back up to 60, and they're all excited, like, can't miss this one, and then the stock starts coming apart. There's an analyst all over U.S. Steel that's just saying it's a short. Has a target of like $5 on it, and you can see and hear this pattern as it just absolutely rolled over in U.S. Steel. Take a look here as it comes up near that major 38% right over there. The pattern rolls over. We had it falling into the late May or early June period, and here it comes down. Support in here is at about, we'll call it 1340. It's trading at 1410. We actually think in this area it's going to get a very good bounce from that level, so we wouldn't be surprised to see some kind of a bounce, but that is not a very good looking stock. Also had big declines in Schnitzer and Nucor, AK Steel, another two, we'll call it 2-3 weeks in this group for the steel stocks, and this is a bad week for U.S. Steel and for those people that chased it up in a big way. Now, retail, I mean, this was really one of the worst weeks we have seen, and for some stocks, it's the worst like in decades. So take a look. We'll start out by looking at Nordstrom. As these earnings misses just keep coming, it's, whether it's about Amazon or whether it's about the slowing economy, it's just a horrible environment for the brick and mortar stores, and we're going to take a look in here as we look at this pattern. Take a look at Nordstrom first, which is JWN. And there's that pattern right in there. You can see it made its high, well, a year ago, way up about 83. And what's really interesting, and let's just get a little closer look in here, you can see the cyclic rhythms in here as it rallies. We're just looking at this smaller one right here, and then falls and rallies and falls and rallies, and then it gets right back up to this 34-week moving average. That's the Hull moving average, HULL, and as it rolls over, it's a negative sign, and you could see just total annihilation. This looks like July before this low is due in here, so there's a lot of things that point to me to July. That's part of why I think the stock market's going to get hit pretty good into that summertime period. So you could see Nordstrom moves down very, very significantly. I'm just going to fire through a bunch of these in here. SHLD, this is a stock that we've been talking about, is going much lower. Everything about these patterns says much lower. We thought it would be down in the low teens and maybe a single-digit stock, and there it is trading down in the 11s. So just a horrible looking pattern in there in SHLD. Take a look here at Macy's M, the same type of a thing as another big down week. Nordstrom down 18%, Sears down 18%, Macy's down 16% on the week. This one we have out until June before that bottom is due, so that gives you another sense of the kind of weakness that you have seen in here. Again, note that important 34-week moving average right over here, the whole moving average rolling over right there, and it gives you that signal of big move on the downside. If I switch over to the daily pattern on this one, you can see in here just classic looking stuff. In here, as you had a diamond top pattern right over here, a big decline, a bear flag right into resistance. The slim ribbon turns negative right over here on the daily, and then the stock just collapses through that minor support right there. Slim ribbon still very negative. Got to think it's somewhat oversold in here in Macy's, but here's the weekly again. Just a bad looking chart. We'll look for it to, pop around in here, go a little bit lower for probably the next month. Kohl's KSS, a big revenue miss and moves down also 11%. Big down move in there in this retailer. Note the diamond. This could have been a bottom. Diamonds are 50-50 really. It depends on where they break out. But when you see this kind of a pattern and then the rally fail and all this time left to go, that says to us there was a lot of downside risk still. And that looks to me like getting very near a bottom in this one. So this is the one that does look like it could bottom a little bit earlier, but you got to be pretty brave to buy that. Talk about being brave to buy something. How about JCPenney? Now, this is on our list of worst stocks for 2016. Right over here, we have felt it's a $2 stock. Well, it was an $11 stock on its way to $2, obviously, as it had this big rally, as all of this ridiculous hope for turning this store around, this store that is just absolutely old style. I mean, just horrible business. And now you could see it breaking down again, getting very close to its point where it ended the year. And we're going to look for it to decline into June, maybe get a rally, and then decline big out there. We still think it is a $2 stock coming here in JCPenney because the issues with them are existential. So big breaks in the retail stocks. In fact, Core's down 18%, Dillard's down 9%, Decker's down 9%. We talked about the earnings coming up in Lowe's, the Lowe's and Home Depot, those have been retailers that have held up. They really look like they're rolling over too, and I wouldn't be surprised to see some big declines coming in those stocks. So that's it. Retail a mess, and that's our worst of the week. We'll be right back with our short-term view. This is a short-term view of the coming week. We do this every week, taking accountability of what we said in the last week, always trying to get 60 to 70% would be very nice as we do this type of analysis. This week, we're going to give us a solid 70%. Really, we had the oil market and the gold market do pretty much as we expected, and the stock market also kind of got partially right on the euro, and the bond market, it followed the pattern, but didn't get quite as low as we expected before it got this bounce going on again this week. So we're going to take a look at this, and when we get to the S&P 500, I got to tell you, this is a precarious pattern we're looking at right there, and you're going to be interested in seeing that. We're going to start out, though, in the oil market. We're going to look at /CL. And what we expected was a dip and a rally. That's really what we were looking for. Test 43 and then bounce is what we said last week. I would say that this was pretty close. You can see in here as we look at this, it gets down to the lower level of the slim ribbon. That's the 21-bar exponential moving average right over there. And then it gets a bounce. We said it would be about 43, and that was right around 43. 1.03, just above that short-term support zone. So we figured it would do this, and that is what it did. We expect that this week is going to be a rolling over week. The kind of support again is at this area of slim ribbon at first, and the pattern that we're mostly looking at is kind of rolling over and pulling down in here and making a low maybe around 44, and that's this pattern that you could see right in here. Then one more rally attempt in there, and then we think that there's a lot of risk. Talked about earlier in the show that we projected down into the 39s. This is the 89-day moving average coming up, and we do believe that it's going to come down at some point and test that level. So right now for the short term, we're just going to call it a rolling over, maybe get down to a low of around 44 on the week. That would be losing a couple of dollars, so we could see that happening. Next one we're going to look at is gold /GC, and this one, take a look, get this baby up. And there's a lot of drawing on here because we're looking at silver and gold and the GDX all on the same chart. And take a look right over here, as you see this nested low area. What that tells us is that we expect it to be moving slightly lower over this shorter term and then getting ready for another move on the upside. Now, what we said last week was a sideways choppy move, and that was exactly what we had. We thought that, the silver pattern was going to hold it up, but the corrective pattern was going to push it down and it was going to kind of get stuck. And that's exactly what happened. Now we're at a point where there is just a little bit more chance for a little bit more on the downside. We're kind of looking for 1250-ish in here, and then after that we think it could be explosive. Test that 1306 number and even higher. So we're going to call this week kind of a sloppy chop on the downside, maybe test 1250, and then turning up either late week or next week. So we're not exactly sure when it's going to turn up. We really just look for this action right in here. Late week or next week is when we think it's going to happen. So now let's take a look, and we look at the euro /6E. Said that the dollar had a better week this week. What we said was we thought that the euro would come down and test this support area and then rally. So we thought it would get down right in here and then rally up to this minor resistance. It got there, it got the rally, but then absolutely failed. So we don't get full credit for that, because even though we were bearish for this period, in other words, rally up here, turn around and go down, you can see that right here, we didn't get the rally, we didn't get the entry right over there, so we don't get credit for that. So got a little support there, got the rally, and didn't give us the short side entry that we had hoped for. Now for this coming week, you can see that we have two different cycle patterns in sync on the downside. That says to me that we're going to get a test of this short-term support in here. That's right around 112.40. Right over there is the top of that support. We consider this to be a buy zone, so we don't think that the euro's got a lot of downside. So this week probably chop its way down over here, and then the following week, remember we said gold up the following week? Well, the euro and gold tend to be correlated, so we think that lines up very nicely, and that we're likely to get, choppy on the downside right now the next week, and then turn to the upside, right in alignment with gold, which both trade opposite, inversely correlated to the dollar. So the next thing we're going to look at is the bond market /ZN. We thought that the intermediate pattern that we're talking about was going to have a large decline over the next 4 or 5 weeks. We talked about that, and make sure you watch our big picture analysis on bonds this coming week. And what we're looking at in here, what we were looking at was a rolling over. So we got the rolling over. You can see that right in here. It has an up day in here, but it has really gone nowhere, and we think it's got a down week coming right in here. So the stock market, I'm going to show you, looks really nasty right now. And if that's the case, this might make a little bit more of a pop here, roll over, and our bigger decline may be out here somewhere. That's a little longer term pattern. We're going to call this coming week a down week, in spite of the fact that we see the stock market in some trouble. This may try to get up here near this cycle peak, right around 3110 first, but then roll over, and then this support area starts at around 130.04. That's really what we're looking for as a test in the next week or so of this 130.04 number. If it breaks through this level here, because the stock market really comes apart and it's looking really bad right now, then that's going to change the scenario somewhat, in that it looks more like this right over here, another rally, and then the bigger decline out over here. Again, we're looking for a few weeks from now as the big decline. Right now it looks more like it's more of a choppy, try to hold its way up in here. So we're going to look for a small down week in the bond market, even though it might try the upside a little bit. So that's that. Now, I've just cautioned a couple times about the stock market, and I want to show you why. You're going to see some short-term cycle analysis here that says that there is a very threatening pattern going on here right now. We're going to look again. Everything we looked at was daily charts, and this is the daily chart of the SPX that is scary. Get ready for head and shoulders top forming. Now, cycles are what form patterns. Now, you can see this rally and this sell-off right in here. That's the cycle, and you can see the timing is perfect. And then the rally right over there, that's just perfect pattern. This sell-off right over here made the left shoulder. You can see that. This whole cycle in here made the head. You can see that forming. And now this cycle here, it failed fast right at the resistance areas there, and is now rolling over. If the S&P 500 breaks that support line right there at this last low, and it could do it today while this show is still getting completed in production, let's say under 2040, that is a horrible pattern. The way that would then shape up based on the cycle patterns in here is that this is what we're looking at right in here, with this being a big acceleration on the downside into the end of May. So the way that looks is down into this week, then an attempted rally, and then big down after that, with this area of major support around 2000 to 1965 a threat. Now, I actually thought 2033 was the area that we were going to test. That's this low over here. But now that this pattern formed, it's much worse. And this really talks to some very sizable declines potentially coming. I really have to caution about that, because again, this is the pattern we're looking at, and what that says is that this is the pattern right now. Down next week, an attempted rally at some point, and then down big. That's really the way this looks right now. So I'm going to put up a big flashing danger light based on what I see in this pattern right at this moment. We'll look for attempted bounces in here, but again, under that 2040 number, and you know that there are big issues in here. And we're going to just say big downside risk. And based on this pattern, the best I see in here right now is coming down to 2,000 on the S&P 500 over these next couple of weeks. So it could be just a jagged trip on the downside, but we'll call that trouble when we look at it. So when we look at the VIX, VIX, we have talked about a major bottoming going on in implied volatility. So we're going to look at this, and you can see the way this pattern shapes up. It really says that, you know, we're kind of in this area right here where the next week it can chop around, but then after that, a big upturn coming right there in implied volatility. That really is in alignment with what we talk about just now on the shorter term charts. And here is the implied volatility weekly chart, and man, we're looking at a time in here where it bottomed right here and turned up, and we could get a big spike. I actually think in the next few weeks we're going to see implied volatilities at 25 to 30. And that is a big call, and that's because we have this pattern in here in the S&P 500 that says there is big trouble. Man, I'm almost choking on that one, and I think that's where we are. That is it for Market Week. I hope you found it valuable. Quick note that once a quarter we take a week off. That's this coming week, so there will be no Market Week show in the coming week. And those of you that are members, you've gotten our calendar for the next week. We hope you have a great trading week, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.